we're going to dive in. We're going to talk a little bit about the market in Alabama, and then answer some real estate questions, whatever you all want to chat about today. Any questions that for those that's watching live that comment in, we'll definitely take those questions and get those answered. But I always kind of at least once a month want to go through and look at the Redfin data and kind of understand what's going on, because the data is going to tell you what's happening in the state, where it's that we can make business decisions. But one of the things that right now, just looking back at March data, the home prices, they dropped 0.2%, and I think nationally that's what we were seeing across the board. But year over year, prices only went down 0.2%. You have a lot of people coming out of the holiday season that were talking crash, that the real estate market was crashing. We're not seeing that. The market has stabilized, and it's dropped a little bit. But if you look at it, transactions is what crashed. That on some areas, it was 40%. We see here in Alabama, the number of houses that sold were 23%. So that's a crash in transactions. Transactions they hadn't stopped, but they're down 20%. That's a nice little drop. And the thing with that is people aren't buying. High interest rates. It's preventing people from buying. And then also a lot of people, especially when you start looking at like move up buyers, people that own a house 6-7 years, they have a kid or two, they're looking for a bigger house. So right now, those people aren't trading or selling their houses that have historically low interest rates, sub 4% interest rates, in order to go buy something and get a 7% rate. It just doesn't make sense. They're going to be paying, their payment is going to go up astronomically, especially if you're looking to buy a bigger house. And so a lot of people are just waiting. They're staying where they are, and there's not a lot of activity. And so hence here, transactions are down 23%, which is actually pretty good, because I think overall the trend is around 40% nationally. So Alabama is doing pretty good transaction wise. Even being down 23% is good relative to the rest of the national market. But when you go through and look at like the median sale price, we talked about 270,000 is crazy. If you go back and look, 2021, the median sales price in April of 2020 was a whopping 209,000. You can see there at the bottom. I'll bring this down a little bit more, but you can see here right now is at 270, and less than actually right at 3 years ago, April of 3 years ago, 209,000. That the price of real estate, the average sales price has gone up almost, was that 60,000 doing public, man. So that's kind of where we are with the state of market. A lot of inflation. The trajectory of real estate is some things have to change. I think bottom line that some things are going to have to change. We see it right now in the data that things are going to pull back. We don't know how aggressive. If you look back to 2007, housing dropped over a 3-4 year period, that it wasn't an immediate thing with the housing market. And so when you start looking at the wages and what people have going on in regards to employment, that with these high interest rates and with these high prices, that it just takes more of people's check just to live and pay for housing. And so, and that's the thing, that job wages hasn't caught up with this price appreciation in real estate. And so, especially with the interest rates, it just makes it really untenable for people to afford a house right now. In which, for those that have apartments, have just regular landlords, that's why we see right now where rents, especially areas that haven't been overbuilt. When you start talking about Austin and Phoenix, that a lot of the areas like that you have a lot of multifamily, a lot of new home supply coming on, and especially new builders are building to rent, that those areas are going to start seeing some pullback and actually in the rent prices they're able to charge too, just because there's so much capacity and the inventory is spiking up there. And so that's what I really like about Alabama, that there's not a lot of overbuilding going on right now. And so I think that in regards is going to keep the market a little bit more stable. You're not going to see any wow drops that's happening right now. You see, we only down like 0.2%. So will we pull back to where we were pre-pandemic, April 2020, when we were around 209,000? If we do it, it'll happen gradually. It won't be immediate, but something's got to happen. Either wages will go up, which with unemployment and jobs, if the recession, that they're calling for goes, it's going to be interesting to see how wages catch up in a recessionary environment. It's just gonna be interesting. So, if I was a betting man, I would say the prices are gonna probably drop. 10%, which would be what, a reduction of 27,000. So I wouldn't be shocked there. But I think in the meantime is especially us as real estate investors that you never want to get caught holding a falling knife or trying to catch a falling knife. But I think the big thing for us is to kind of just look at the data and make decisions. Whereas that we're not doing long-term projects and we're factoring in that, hey, this house may be worth 10% less when I sell it, or maybe 15% less. And if it passes that stress test, then it's a deal. And I think that's one of the biggest things that you really just got to get nailed in on your numbers and understand what's going on in the market so you can be informed and you can make informed decisions. But just kind of digging in a little bit more, the top 10 metro areas, Cleveland, Alabama. I didn't even know where Cleveland, Alabama was, but the fastest growing sale price, God, look at that, 56% growth in Cleveland, Alabama. Mountain Brook. We've done a project in Mountain Brook. I think the average house price in Mountain Brook is like 900,000. It's crazy, and I'll click on that one to show that one to you. But I'm pretty sure that it's 900,000. Yep, 906. Yep, and 24.9, 25% year over year raise in the median sales price in Mount Brook, which is just crazy. And look at that. And the median days on market is still only 16. Mount Brook, if you got money, that is the place that you want to be in Jefferson County. No, it's always been that way. And you see, it's not a whole lot of volume, only 35 houses sold. And I think that's one of the things too, where you have limited inventory, you have price appreciation, supply and demand. If it's not a lot of it and you got a lot of people that want it, the price is going to go up. And I think you see that here with Mountain Brook, of course, which is kind of one of the best areas in Jefferson County to live. But you look at the other metro areas, you got Foley, Dothan, Foley, that Dothan area, Baldwin County. Baldwin County is one of the fastest growing counties in the state. So no surprises there with Foley. And then you'll see Spanish Fork. Gulf Shores is also in Baldwin County. Where else? Okay. It's only got two, but you got two cities there within Baldwin County that's growing. Dothan, on the other side of the state, 20%, as well as Decatur, Enterprise, Alabaster. Okay, so some of these smaller towns, Enterprise, you have the Army base there with Rucker Airfield. Alabaster is a suburb of Birmingham. Hueytown as well, suburb of Birmingham. So you see some growth there. So you can see when we start talking about Birmingham, and I talked about the article that they had in AL.com about Jefferson County the year, and I think they lost about 5,000 people, that you see that a lot of the people, when you start seeing people moving around in the areas and leaving certain cities and going to other suburbs of the major metro area, this is kind of, you see some of the benefits of those with just the price appreciation, because more and more people come in and they're not building as much inventory, that you're going to see more price appreciation than you would see at the national level where everybody's saying prices only going up X amount. Well, here they're going up 20% in some of these areas. So for my flippers out there, my investors, if you're buying real estate, you're trying to sell and flip real estate, these are the areas you want to be, because guess what? The prices are going up. So a lot of jobs are going on here. These areas are growing, and they're seeing an increase in sale prices. Auburn is on the map. Roll Tide always. And but for my renters as well too, if you're investing, you want to rent in these areas and you want to dig in, understand the economies where that, hey, what's going on in Foley? Did a new job plant open up? Or Alabaster, what's going on here? Gulf Shores, we know, is a great tourist destination, and appreciation there. I would say the second home market, we're gonna start seeing prices decline a lot. Whereas that, I think when you start looking at the pullback, that when you start having a recession, the first thing that people let go are their second homes that they don't need, because you gotta take care of the house that you're in, and especially if you lose a job, that comes into question. So the next couple of years, if you're looking to pick up a beach house or a second home somewhere, it's gonna probably be a good time to get some good deals in that area along the beach. Especially you want to get a second family house, something to think about. But here are the kind of the darlings of Alabama, the top 10 metro areas where we're still seeing growth. Whereas that we saw overall for the state that sales pulled back 0.2%, but that's not the tale for the entire state. And so that's why I keep telling people real estate is local, local, local. Look at your local market, look at your cities here. If you're looking to flip, hey, I would target some of these areas. You can get a flip in Mountain Brook, might be pretty good. Foley, Dothan, Decatur. You definitely, when you start talking about the average sales price is 900,000, that's more so, I would say, for seasoned investors that have really good team, and you're gonna have to have a lot of resources behind you because you're probably gonna easily pay 600,000 for a house. You're gonna have to have premium finishes. Your contractor crews are gonna have to be on game, on point, and you need to know what you're doing because you don't definitely don't want to get over your head with that. But some of these markets where you can come in and you can find houses that are below the median sales price. We know right now it's 270,000, but you can find a house that will sell for 200K. There's not a lot of those out there. So if you can find some deals on the lower end, that's where you can minimize your risk exposure, and really do some great projects. Because the media is telling you doom and gloom, but we see markets only down sales price 0.2%. There's a lot of growth going, not growth, but a lot of sales price appreciation in some of these areas. And so if you go in and do one deal a year and make an extra $30,000, $40,000, or add $30,000, $40,000 in equity when you keep for a rental property, that is how you build wealth. And so that's what I just want to make sure that everybody's tracking, that it's not all doom and gloom, but you just got to be more conservative with your estimation of price and understand that prices are pulling back some. But if you put a buffer in there to say, hey, that I'm gonna add 10% or 15% of cushion on my after repair value, I'm not gonna go at today's rates, then hey, if the numbers still work, then it's a deal, and just move out. So just the number of homes sale, 10% year over year increase in number of homes that have been sold. Newly listed homes, so listings are down 13%. That's a little bit troubling and that's what's, I think, propping up the market right now. And prices aren't dropping because there's no inventory coming on the market. People aren't selling. And so this is the spring season. This is the time we see most of the listings happening right now, April. And you can see that we're down compared to last year, almost 14%. And we only have 2 months of supply. So that is a problem. 2 months of supply. We're nowhere near, where your equilibrium is going to be somewhere 5, 6 months where it's a balanced market. So you're really still in a seller's market, even with the high interest rates and everything going on. You only have 2 months of supply, which tells you that we need more inventory to come on before we start seeing the opportunity where buyers are having more and more opportunities to have price reductions and everything. And I think the biggest thing, we start looking at 2 months of supply, that the most of the inventory that's come on the market has been on the higher end, the luxury home, more expensive homes that you can't find out. Like for us, 200,000 and below, that it's really hard to find quality housing that's under that price. There's still some out there, but most of the new inventory, we start digging a little bit deeper, that it's on the upper end with more higher price homes. So that's it. You can see here most competitive cities in Alabama, Mountain Brook, with the price appreciation, you see all that. Saraland, Alabama, definitely so. We have a property we're about to sell with my parents' place in Saraland, and I've already had two people find me off market just through the neighbors, cleaning service. Their car was in the yard, and the neighbor told somebody that they knew that was buying, so they called a cleaning service, and then they told the cleaning service to give me their information. So I'm like, man, these people are aggressive, but that's how you get deals done. They're calling and doing that. So Smith Station, Highland, Bayonet, Chickasaw, Sims, Vestavia Hills. So the most competitive cities. So that's something else for you to look at, just to know where you go. That hey, if you start looking at the areas that's high in sales price appreciation that we saw, and now you see that it's not, you probably want to go to one of those cities. If you're a new investor, I would say, look at some of those cities that have a lot of sales appreciation, but they're not competitive. You want to be somewhere where you go in like, man, nobody's buying houses and flipping houses here. Perfect. I'll come in and do that and provide the service and less competition. And I think the last thing, then we'll jump into questions, but you can see just where people are moving to with the data here as well too. There's a lot of people leaving California. They're leaving California. They're leaving Virginia, where I'm at. But a lot of people moving to Florida, Texas, Georgia, the Southeast. We see that happening. A lot of people leaving Alaska as well too. So this kind of just let you all know, kind of on a national level, what is going on in the nation Where are the opportunities? Follow the jobs, follow the jobs, follow the jobs. Because guess what? People are going to follow the jobs. They're going to move to where the jobs are. So I think this is just kind of is indicative that you can see more than 2,000 people were searching to move in Alabama versus out of the state. Florida, 43,000 want to move to Florida. How many people want to leave California? 44,000. We're looking to research what's going on. And you can see right here, they got the data here where net inflow that Miami, a lot of people moving to Miami, Phoenix, Las Vegas, Tampa's on there, Orlando. A lot of people leaving San Francisco. 31,000 people left. This net outflow from January to March. They had 31,000 people leave the San Francisco area. Jeez. New York. This one here, Washington, D.C. Washington, D.C., this is just the city, 18,000. And D.C. isn't that big. So that's a big number. But a lot of the things that you see with DC, you got a lot of military that's constantly in and out, that's moving. And so with that alone, that I think that may be skewed some way. I don't know how they track that. But a lot of times, well, it's net. But usually you have people PCS out and people PCS in. So this is net outflow. So that's interesting. And most of the military, most people can't afford to live in DC anyway. They live kind of on the Virginia, Maryland side. But yep, just interesting. Look at the numbers here. You can see where people are leaving out from. Just something to kind of key in on when you're looking at your real estate investing and understand. So always look at the data, follow the numbers. You want to understand what's going on at your level in your local market. It's cool to understand what's happening at the national level, but you want to dive in and understand what's happening in your backyard, whereas you can be an informed investor and understand what's happening in your state.